Most investors missed uranium. Most investors missed lithium. Most investors are about to miss graphite. Right now, while China's strangling global supply and the US is scrambling to secure sources, there is a Canadian company with the highest grade graphite deposit in North America, government-backed technology, $500 million in projected value, and a stock price that makes absolutely no sense. By the end of this video, you're going to understand why Focus Graphite could be a 5 to 10x opportunity before permits arrive in 2026. Stick around. Welcome back to the channel. Over the past few weeks, we've talked extensively about China and how it's creating a deflationary wave that's spreading globally. But here's what most investors miss. Embedded in the crisis is an enormous opportunity. China is restricting graphite exports. The US just imposed 160% tariffs on Chinese graphite. NATO designated graphite as very high risk. North America needs domestic graphite supply, and there is one company positioned to capture that entire market. We're going to break down Focus Graphite in the next 12 minutes. We're talking fundamentals, technology, valuations, catalysts, and most importantly, why this could be the critical mineral play for 2026. So hit subscribe and let's dive right in. First, let's establish why graphite matters. Graphite accounts for 28% of all materials going into lithium-ion batteries for electric vehicles. A single EV battery needs 50 to 100 kilograms of graphite. That's a lot of material per vehicle. Now, demand has been exploding. Battery and node applications represented just 8% of graphite consumption in 2020. By 2024, it jumped to 28% of the market. Projections showed this surging to 62% by 2036. We're talking about doubling and then tripling market share in just one segment. Here's the problem. Benchmark Minerals estimates meeting global battery demand by 2030 would require 31 new natural graphite mines. 31. That's an enormous supply gap. And we don't even have 31 new mines coming online. We barely have 3. Now, who controls graphite supply? China, full stop. China produces 77% of the world's natural graphite. They control over 95% of synthetic graphite production. They handle nearly 100% of graphite refining. The US produces less than 1% of global graphite and 100% import reliant. This creates massive vulnerability, and vulnerabilities creates policy response. The U.S. Commerce Department imposed 93.5 anti-dumping tariff on Chinese graphite, combined with existing duties that brings total tariffs to approximately 160%. China, in October, announced export restriction on graphite and other materials starting in November. And now recently, we've had that conversation between Trump and President Xi Jinping, and they've delayed those things by a year, but we haven't had a final, communique from the Chinese Trade Commission. But we still think that this is economic war. And there's no telling what will happen one morning when Trump wakes up and has a change of heart, or China changes its mind. So here is the final piece. NATO designated graphite as a very high-risk defense critical material. We're talking about graphite that goes into fighter aircraft, submarines, missiles, hypersonic rockets, tanks. When NATO says something is critical, policy follows. And policy means tariffs, subsidies, and procurement priorities for North American supply. So the backdrop is simple. Supply crisis, geopolitical risk, policy support, and massive demand growth. This is the environment where graphite producers thrive. Well, now, let's talk about Focus Graphite specifically. This company operates 2 flagship projects in Quebec, Canada, and here's where they separate from every other graphite player. The Lac Knife project represents North America's highest grade natural flake graphite deposit at approximately 15% graphitic carbon. Some zones exceed 20% CG. Compare that to the global average around 8%. Focus is literally double the grade of most competitors. We're not going to get too deep into the details because most of us don't understand it, but I'm going to try to make this simple. Now, why does grade matter? High grade means more graphite per ton of ore processed. That means lower mining costs per unit of production. That means premium pricing power. That means exceptional margins. The company completed a full feasibility study in 2023 that projects a 27-year mine life, producing approximately 50,000 tons of graphite concentrate annually at 99.7% purity. We're talking about exceptional economics here. The second project, which is Lac Knife, and this is in Quebec as well, is going to be one that produces around 59.3 million tons at a lower concentrate, with about 10.61%, still higher than global average of 8. That's an indicated 6.3 million tons of actual natural flake graphite in situ, with an additional 1.6 million tons inferred at higher grades. The company has announced exploration results including 77-meter true thickness grading and other 91-meter true thickness grading. And they're expecting resource increases in early 2026. Here's what is critical to understand. Focus Graphite isn't just a junior explorer hoping to find something. They've already got massive, high-grade, delineated resources. They've completed feasibility studies. They've proven the economics. They've de-risked relative to 90% of mining companies out there. But the assets are just the beginning. The real competitive advantage is technology. And we're going to get to that next. Focus Graphite developed proprietary technology that creates real moats. The company received up to $14.1 million in Canadian government funding to build a demonstration plant for their patent-pending green chemical-free purification process. This is huge. This is not a grant to explore. This is a government capital to commercialize proven technology. The purification process achieves 99.95 purity. That's nuclear-grade purity, without using harmful acids or chemicals. This is a game changer for environmental compliance, for battery manufacturer procurement, and for premium pricing. Here's what alleviates this beyond just better processing. Early battery testing with Charge CCCV LLC, an American energy technologies company, shows a 26% increase in cathode electrode density using Focus Graphite. Translation in English: batteries built with Focus Graphite perform better. They hold more charge, they deliver more power. That's proprietary advantage that commands premium price. The company patent-pending silicon-enhanced battery technology represents another layer of innovation. Silicon offers 7 to 8 times higher, 7 to 8 times higher, density for energy storage capacity than graphite alone when properly integrated. This technology is scalable and agnostic to the graphite source, which means licensable revenue streams to other graphite manufacturers. They've already received $300,000 from IPLN funding and another $300,000 from IP Ontario to advance patent-pending battery technology. Government is literally backing this at multiple levels. And here's the verification piece. Focus tested their Lac Knife graphite in real hypersonic rocket launch for aerospace applications. And this is the difference between a mining company and technology company. Focus has mining assets plus proprietary technology plus government support plus third-party validation. That's a compelling combination. This is the moment all investors are waiting for. What is the investment opportunity here? Focus Graphite, as of October 2025, has a market cap of approximately 55 million Canadian dollars. The stock trades around 56 cents. Now compare that to peers with substantially lower grade deposits. Like Nouveau Monde Graphite is at 5% grade and is worth 600 million market cap. Titan Mining, 9% grade, 500 million market cap. South Star Battery Metals, 8% grade, 400 million market cap. Falcon Energy Materials, 7% grade, 300 million market cap. Focus Graphite has the highest grade deposit and trades for a fraction of the valuation. This is a valuation inversion. This is market inefficiency. Now, why does this exist? Likely because Focus is smaller, has less analyst coverage, is on two smaller exchanges, the TSX.V and OTC, and hasn't had the same promotional machinery as larger peers. But that gap is closing. The catalysts are crystal clear. First, permits arriving within approximately 2 years. Permitting de-risks everything. When permits arrive, market cap multiples expand dramatically for approved mining projects. Second, resource updates expected at Lac Pisca in early 2026. These typically contain grade and tonnage increases that support revised NPV calculations and upwardly revised resource estimates. Third, continued government support and policy tailwinds. Every tariff increase, every NATO defense designation, every China export restriction increases the urgency around North American supply. Fourth, partnership announcements. The company is aligned with government for trade commissions in Canada, US, and Asia. Major battery manufacturers and defense contractors need graphite secured. Partnerships aren't rumors at this point, they're coming. And fifth, the commodities supercycle is critical minerals, and battery demand accelerates and China restricts supply, graphite prices are going to move higher. When graphite prices move higher, mining projects with higher grades and lower costs generate exceptional returns. The feasibility study projects $500 million per pre-tax NPV, which is about $285 million after tax, with a 28.7% pre-tax IRR and 22.4% tax after IRR over a 27-year mine, at 2.8-year payback pre-tax. If you're buying at 50 to 55 million market cap and the project generates 285 million after tax over 27 years, that's straightforward mathematics problem. Even conservative assumptions support significant upside. The feasibility study projects $500 million pre-tax and about 285 million after tax. So on a 27-year mine life, it's a crazy upward scale from here. If you're buying at 55 million market cap and the project generates $285 million per year after tax value over 27 years, that's a straightforward mathematical problem. Even conservative assumptions support significant upside here. Here's what you need to do. First, understand that FMS trades on 3 exchanges, the TSX.V, the OTCQB, and the FSE. And you can see the symbols there on the screen. This is straight from their investor deck. This is not a paid investment from this channel. I'm simply been looking for great plays that make sense and valuations that make sense. And finally, after 2 weeks of dry, spots on this channel of just warnings, I'm bringing you something that I'm going to be looking at personally. Second, make sure you do your own due diligence. Read the latest news releases, review the feasibility study, read their investment deck, understand the project timeline. Mining stocks are volatile. This is a junior company approaching permitting. This isn't a blue chip stable dividend play. This is a growth story with binary outcomes. But the risk reward at current valuations is asymmetric to the upside. Third, if you're interested in critical minerals exposure, FMS deserves to be on your short list alongside uranium and lithium names. This is a different sector, different supply dynamics, but same theme. Scarce materials with geopolitical importance trading below intrinsic value. And finally, subscribe and like this video. Make sure you're following us. We're going to cover more of these types of things as they become visible. I'm not going to cover any more of these hype AI stocks that don't make sense when it comes to the valuation. Thanks for watching. Drop a comment below. What's your take on graphite as an investment? Do you think Focus Graphite deserves valuation discount? Or is there risk we're not accounting for? I read every comment and respond to most of them as soon as possible. Until next time, stay safe, stay diversified, and we'll catch you in the next video.